Welcome back. You're watching The Money Show with me, Kavita Thapliyal. And earlier this week, gold prices soared to touch a fresh lifetime high on the MCX after banking crisis in the US and Europe triggered a return to safe haven buying. Gold prices on the MCX crossed the 60,000 mark per 10 grams for the first time this week. Now, the big question is, as equity markets remain volatile and the global macros remain negative, should investors choose to go long on gold? Is this the right time to invest in the shiny yellow metal? Let's answer all of these questions with G Chandrashekhar, commodity expert, and Aditya Shah, Chief Investment Officer, JST Investments. Good evening. Welcome both of you, and let's just start with what's happening with gold and the kind of high it's reached, 60,000. It is going to sustain. Chandrasekhar sir, what do you have to say? What's your take? What are triggers that actually gold is working on, and are these triggers sustainable?
It's already started to correct and it's fallen below 60,000.
Right.
We must remember the last 3 weeks have been absolutely eventful with three mid-sized US banks collapsing, and then you have the UBS taking over Credit Suisse, etc. A lot of banking-related issues, but the banking system has now been substantially calmed by the US Federal Reserve taking a lot of action, and therefore I personally don't see any further no contagion effect very clearly, and the nervousness in the banking system has been calmed very substantially, and we know last night the FOMC raised interest rates by 25 basis points. I expect another hike in the month of May, another 25 basis points. All this is going to be somewhat not supportive for gold in my view in the short term. But in the second half of the year, very clearly we can see a rate hike pause, and most likely there could be a rate cut in the first quarter of 24. So we need to take all this on board, and when we take this on board, I expect for gold, the second half of this year is going to be very positive, and there could be a substantial price rise. But for this quarter, April, May, certainly April and May, I don't see a bull run in gold. I see further correction coming in gold in the global market, which will obviously get reflected in the domestic market.
Sure. All right. So second half looks very positive for gold. But Aditya, do you concur, Mr. Chandrasekhar? And if I just have to talk about the one more interest rate hike that's left, will you be seeing a range-bound movement in gold? Can you give us the levels?
So, good evening, Kavita. I think that the uncertainty for gold is much more. Right now, what is happening is in the US, the entire banking system is crippled with crisis, and many banks are seeing bank runs. Because of it, there is a lot of uncertainty, and that's why the gold prices have moved up. In my opinion, yesterday, the US Fed did increase interest rates, but they did nothing to calm the nerves of the US small bank deposit holders, which could mean that the uncertainty could linger on. So, in my opinion, a near-term move to gold, that will be a lot of investors will move to gold in the near term. That could see the gold prices remain here or go up as well. It will all depend on how the uncertainty in the US does play out. So, in my opinion, gold prices will continue to be here or may increase further as well, depending on what happens with the bank contagion that is happening in the US. The first point. The second point is the US is saying that the US Fed is saying that it will not stop hiking interest rates until inflation comes under control. However, the median expectation in the US is that by June itself, the US Fed will start cutting interest rates because it wants to support the economy. So, in my opinion, there's a huge dilemma in the US economy, and US is heading into a severe recession, which could mean that the gold prices could stay elevated throughout this year. So throughout this year, gold could do really well. However, should you invest incrementally in gold, you should stick to your asset allocation. Asset allocation is a key moment in all of this. Some years one asset will outperform, some years other asset class will outperform. But in my opinion, asset allocation is very, very important. But yes, gold will continue to do well until this banking crisis is gone through.
So let's also talk about demands at different levels. You know, we have to talk about physical demand and also the demand from the central banks. How is it shaping up? Chandra sir?
You mean? Oh, yes. Last year, the central bankers around the world bought something like 1,400 tons. Okay, that's a record thing. But I expect that they will not be able to buy, or they will not buy as much as 1,400 tons this year. It'll be much less. It'll be not in 4 digit, but it'll be in 3 digits. This is the first proposition. Second, look at physical demand. At these high prices, there is a destruction of demand in price sensitive markets such as India, and certainly even in China. China is no exception to price sensitivity of demand. And therefore, when world's two largest economies, which are very large importers and consumers of gold, slow down their purchases, they are not able to sell locally jewelry or whatever, then obviously it will have an effect on international gold prices. Yes, there will be investment demand. Financial investors will certainly come into this market, but there is a limit because ultimately physical demand will start playing a role. And I see that physical demand growth in 23 will be muted. It will not be as much as it was in even 2022. In 23, it will be substantially muted because at high prices, gold demand, there'll be demand destruction in gold. We call this a price elasticity of demand. This is what will come into play. Second one is called income elasticity of demand. At higher income, there'll be more demand for a commodity like gold. But in India, incomes are not going up. And particularly rural incomes are not going up. Therefore, the disposable income with people is not high enough for them to drive towards purchase of gold. Unless, of course, there is a compulsion, family wedding or whatever, only then they'll buy. And therefore, and there is always a fixed budget for gold. For quantity wise, they will buy less, but they'll pay a higher price. And therefore, I don't see physical demand is going to be a challenge. Investment demand, yes, will continue because of global uncertainty. Given these two facts, I don't see a bull run happening in gold very quickly. Certainly not in the upcoming quarter, April, May, June. Second half of the year will be a very different picture. I don't expect any rate cut until the end of the year, very clearly. And my own expectation of the recession, particularly in the United States, will be a mild recession and not a severe recession. The job market in the US is still robust. Inflation is still untamed, and therefore the Fed will continue to tame inflation. Most important quantitative tightening at $95 billion a month. There will continue to be a quantitative tightening, which means liquidity will be reduced within the economy. And then therefore, when you put all these factors together, I see no big opportunity for gold to rise very substantially. People are talking about $2,200 and that kind of number. I don't see gold going there. It'll possibly touch $2,000, but any upward movement beyond that is going to be very tough. But this market is all the time morphing. There are new events that are taking place. Whoever expected the US 3 mid-sized bank collapse until say 2 months ago, nobody expected. Therefore, if under normal circumstances, I don't see a big bull run in gold, but second half prices will certainly rise from the current level.
So, Chandra sir, what about the dollar play over here?
Oh yes, very important, very interesting. We can see the dollar index is what 102, whatever, or close to that. I am bullish on the dollar. I expect the dollar to continue to remain strong, primarily because of the strength of the US economy. tomorrow is Friday, right? Tomorrow you'll get those jobless jobs data that will also have a certain impact on the market. But U.S. economy is quite robust. The labor market is quite robust. Jobs are being created, and therefore that's a very positive sign for the U.S. economy as such. And therefore the dollar, in my view, continue to remain strong, at least in the coming quarter, April, May, June. I don't see that as a challenge at all. And when the dollar remains strong, it is not a very supportive factor for gold. Yeah.
All right, one last question to Aditya, and then we wind up this discussion topic. So, Aditya, what will be the right form of investment in gold right now?
Ma'am, if you are a long-term investor, I will suggest sovereign gold bonds. Many sovereign gold bonds listed in the markets are already trading at a lot of discount, and you can get an advantage because of the lack of liquidity that is available. They're trading at about 10, 15, 20% discount depending on the maturity that you really have. However, the only drawback of the sovereign gold bonds is that to get any tax benefits, you will need to serve the lock-in period. If you don't want the sovereign gold bonds, then the gold ETF are a much better option rather than the physical gold, because physical gold will have transaction costs and a gold ETF or a gold mutual fund will not have those kinds of costs. So number one will be sovereign gold bonds. Number two will be gold ETFs or gold mutual funds. Last will be physical gold. I suggest don't invest in physical gold because a lot of transaction costs and capital gains taxes are involved, which is not the case with sovereign gold bonds.
All right. So, so far, till one more or the last interest rate hike, as it's been reported, the movement will be volatile or maybe range bound. But then second half, as per our panelists, for gold looks really promising. Thank you so much, Chandra sir, being on the show and helping our viewers with their exposure and investment in gold. Aditya, you please stay connected, and we'll take a quick break, and post that, let's get your portfolio strategies checked by Aditya Shah.